Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your weekly technical analysis of LME 3-month copper, aluminium and lead. Hello and welcome. Before I start properly, I just want to let you know that no AI, that is artificial intelligence, was ever used in the composition, production, or recognition of any of the patterns, levels, analysis, or any related items on these, my charts. This was all my own original work, as I think you deserve to have that. So with that, LME 3-month copper. It was, as I said 3 weeks ago, when I said, and I quote, "Despite last week's dip and run lower, prices overall have continued the moving higher, with a higher low last week than seen 3 weeks ago." End of quote. We have seen since a new all-time high made last week of 11,952. This despite it being a daily key reversal down on that same day. Now, I've said for a long time, that the main pattern here had been the dark blue July 22 to January 23 shallowy bullish shift pitch walk, running this market higher. Well, late 2 weeks ago, we punched up through the upper tine of this pattern, which is currently at 11,648. And then again for 3 out of the 5 days of last week, and even yesterday and today. However, we have not as yet stabilized over this dark blue upper tine. So for now, I'll keep it on the daily chart. Okay, so 6 weeks ago, I asked this question, I quote, a quite large question is whether the whole action since the low in April is perhaps a very large bullish halfway hesitation. If that is to be the case, then we could be looking at potential as high as between 11,400 to 11,500 area. End of quote. This seemed a reasonable question at the time, and we did try higher in late October, though not far enough back then. The next question I had 3 weeks ago, and I quote, "Does the market still have the incentive to try that high?" And the answer, as I see it, is still the same, possibly. End of quote. Well, since then, you can see that the market most certainly does have the bullish incentive, but you may now ask, why was I so circumspect about it? And the answer I laid out 2 weeks ago. Again, I quote, though it is a long one. You see, we were at the crossroads of two patterns last week. We could look at the whole late September to date action as a possible head and shoulders pattern, usually seen as a bearish reversal pattern, though there are bullish head and shoulders continuation patterns as well. Or do we look at the whole same action as a nascent bull channel? This week I've highlighted the neckline and the bull channel on my daily chart, as they are both related. The bright red neckline, that's currently at 11,007, is also the pierced but since repaired lower bull channel line. The upper bull channel line, currently 11,694, is interesting, as it is right now reinforcing the dark blue upper tine of the dark blue July 22 to January 23 shallowy bullish shift pitch walk. Thus, the bright red bull channel is the one to watch, as well as the dark blue upper tine. Plus, we can regard the recent head and shoulders as a rarer head and shoulders continuation pattern. And that's the end of the quote. The bright red upper bull channel line crossed over the dark blue upper tine in the middle of last week, just when the market was about to take a strong move on the upside. So there was no better time to do it, in my mind. The question now, and this is now, is what's next? And the simple answer, I've already given, it's stabilization. The market needs to stabilize over both the dark blue upper tine and the bright red upper bull channel line to attempt further moves higher. Otherwise, well, we could end up dropping down to the May 2024 high, the previous all-time high at 11,103. LME 3-month aluminium. As I've stated here many times, there are a number of patterns here, one within another, all happening at the same time, all affecting the market in their own way. And I had hoped they might sort themselves out, and maybe, just maybe, they're finally trying to just do that. Of all the features, by far the most consistent one has been, and still is, the bright red shallowy bullish shift pitch walk for the mid-December 23 to late July 24 move. Prices are right now in between the overhead bright red upper tine, currently at 30.54, and the middle tine below, currently at 27.45. There are also Two supports below are the venerable 50% Fibonacci line for the November 2015 to March 22 move at 27.53, which was an effective capback earlier this year, and then the closer green rising short medium moving average currently at 28.31, which had been a good rising support during this past summertime and most recently in mid-November was a key support then. Now this brings me to the analysis of the action over late September through to mid-November. This is a two-part pattern. The first part is that it is a triple top, giving a primary target that was reached and a secondary hard to reach target down at 27.62, which the market came very close to but did not directly reach. I retired this secondary target 2 weeks ago. The attempts lower were twofold. Made some 4 weeks ago, and in the process the market made a horn bottom, leading to the second pattern I spoke about earlier. The whole October to date action could be seen as a possible double top, Eve and Eve type. This is not verified yet, but if we see prices head down below the green short medium moving average, then I think it will be on the cards. Otherwise, we may have to start looking at the whole late September to date action as a possible bullish halfway hesitation. So what else is there? Well, 2 weeks ago I drew a steep dark blue late September to late November bullish Andrews pitchfork to try and show the way higher. And as I said 2 weeks ago, and I quote, it is quite steep and I would have no trouble in finessing this to a shallower bullish shift pitchfork for the same move, though not just yet. End of quote. Well, this week that time has come and I have redrawn the pitchfork from a dark blue steep bullish Andrews into a shallower dark blue shift pitchfork. However, as you can imagine, with the idea of a possible double top, this dark blue bullish shift pitchfork, well, that will have to be the first to go if this pattern becomes true. So watch the dark blue lower time, which is currently at 28.42, and the green short medium moving average, especially carefully. LME 3-month lead. The key pattern here had been the original rectangle pattern that developed into a quite shallow bright green early August to mid-October bull channel. It's currently 2012 to 2061 above the market. This had been breached on both sides in October, and then in late November the market breached it again on the downside, enough that, as I said 2 weeks ago, I no longer think this pattern is viable as a rectangle, though the bright green lower bull channel line may now still be useful as a resistance. End of quote. The breach that became a break lower halted at the turn into December at the combination of the June 23 low at 1976 and the 50% Fibonacci line for the whole of 2025 at 1971. Just below these, I suspected 2 weeks ago of also being a bullish influence, was the very important bright red neckline extension to the August to December 2024 head and shoulders pattern, which is currently at 1963. Now I suspected this one would be very important, as it held up the market in October, August, July, as far back as May. However, when 2 weeks ago on the pullback upwards, the market became clogged around most of the closely packed moving averages between 1998 and 2008, as well as the concentrated congestion of which I've often spoken about between 2001 to 2003. These resistances turned prices back lower, such that we now can regard the whole November to date action as a bearish halfway hesitation, with an optimum target X below in the 1905 zone, around where the 2021 low is at 1908. What has been surprising this week is how little the bright red neckline gave as support, only stopping prices last Friday before breaching lower yesterday. So far this week, it seems the 38.2% Fibonacci line for 2025 at 1939 has been the support, something it showed back in late May. If that goes, then there is some congestion at 1916, but not much else until the 2021 low and target X. This all ties in with my final point, which is a point I've been making here since the start of this year, and will continue to do so going forward. It has been and still is to me the most important point of all. So at the end of December last year, we saw that 2024 had created here a very large and rare annual key reversal down, here in LME 3-month lead. Hence, even now, if the price is close to where we started in 2025, one should look at all things going forward this year and beyond in this metal in the shadow of this longer term bearish pattern. Thank you for listening and watching this broadcast. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. The copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.